Hello everyone and welcome to Laberinto de Divisas. My name is José Ricaurte Jaén and directly from Dubrovnik in Croatia. Today we're going to record the economic calendar for the current week of January 14 all the way to January 19, 2018. Please remember that trading Forex and derivatives is risky. They're not suitable to all investors. Please make sure you check all the information necessary with your financial advisor. Remember that past performance does not indicate future performance, and above all the information in these videos, it's only for educational purposes. Okay, let's begin. So we're just going to go over first the levels using our MT4 lab data with the 7 majors, the US pairs. We're going to start right away with the EURUSD, euro versus US dollar. And very important that last week, just going to mention this real quick, we take a look at what happened, and we noticed that the 119 level was truly protected by buyers. Now, it was our intention to buy below 119, probably 118.50 all the way to 118.20 was a very attractive buy level, looking all the way to then attack what we have here. Never happened. Prices didn't close and open below. I'm just going to place this horizontal line here. Prices never open and close below this level to have a deeper pullback. Now, of course, we are as of last week we closed at 121.80, and this is a very important level that indicates, at least in the medium term, a lot of euro euphoria and interest in the single currency. Now, very important, if we want to take a look at the weekly chart, we have a critical support at 116.50 is very important. And don't be surprised if at any given time between the next 2 weeks before the end of January we have a pullback that can be as deep as 400 plus pips in this section. In the monthly chart, we want to take a look at the fact that we actually closed last week above the 100 exponential moving average on monthly, the 121.50. This is very critical. The most important will be if prices want to climb all the way to the 123.20, which is around the 200 period moving average, exponential moving average, then prices must close and continue above the 122 level. Let's continue to the GBPUSD, Great British Pound against the US dollar. And same process. We are on the weekly chart. If we go back to the genesis of this bull price action, we have to understand that right here, if we're looking at these bullish candlestick, we're looking at the low 132.19, and what that indicates is that those in favor of the Great British Pound, they protected the 132 level, and that's critical and in continuation. We're going to keep repeating over again the fact that the psychological mark, the round figure 0 and also the middle range 50 are the most critical levels in the continuation of any trend. It could be a bullish or it can be a bearish trend. Very important to keep in mind. Now, if we look at this, figure right here. What we have, it's the pin bar. The price action indicates a massive rejection. What is the massive rejection that we have here? What's the price? We're looking at the low 134.50. That's telling you that buyers protected the 50 level. Now, of course, sometimes you can, experience will let you have this information in advance. Sometimes, just as anything else in life, you need to practice to look at this level. But you can clearly see the push here of prices, saying like prices pushing here lower. Now prices here pushing higher. Now close above 3700s. I mean, that's actually telling you that there's some bullish momentum right here in the pair. Now looking at the monthly chart, let's not deny our target in the long term. It could be as high as the 50 period exponential moving average near 145.60. Now let's go back to the weekly chart. We're going to do one more look, and on the weekly chart we have a different pricing, not too different from the one on the monthly, 144. Just keep an eye on this. Looking this week, we can either look for pullbacks. All those pullbacks should not be lower. We have pullbacks all the way back to 136, and why not retesting the 135.60, 135.50 level. Going into the USDJPY, US dollar versus the Japanese yen, we have a very important closing below the 200 exponential moving average on weekly, and as well the 50. Now, if prices keep pushing lower, if the yen continues this strengthening process, we can go as low as 109.90. Now, just keep in mind one thing. From January to April is usually the repatriation, I'm not sure if that word's correct, but let me know, of Japanese yen company, Japanese companies, and they will be bringing back all that massive amount of foreign currencies that they have to convert back to yen. So that will actually be part of the seasonal. It happened last year. We'll go all the way back to the massive top at 118.50, and all going all the way. I'm going to finish this overview on the currency pairs, on the US pairs, with the USDCHF. Now, very important, next critical support on weekly chart, we have the 200 exponential moving average. Now, very important, is the 96.40. We are about 130 pips from that. So there's some decent amount of pips. Now, if it's going to continue all the way to this level, the 94.50, which could be translated into a triple bottom, well, actually, we need to have a close and open below the 96.40. On the resistance, we have the 50 period exponential moving average, and then the 100. The 50 sits at 98.14, and then we have the red one, 100 and 98.20. Very important to keep in mind. Now, on the space of the data, very important data this week. Tuesday, I will pay attention the harmonized index, consumer price index for Germany. Also, we have interesting data, very important data for the consumer price index from the United Kingdom that will support, if positive, a continuation in the Great British Pound against the US dollar bullish momentum. And then, of course, one of the most important will be by Wednesday, we'll have the CPI for the European Union, more user strength if positive, and of course the final decision on Wednesday, the Bank of Canada, about interest rate decision for the Canadian dollar. If we have a higher above consensus, something about 0.12 increase, we may have a rally on the Canadian dollar. If the bank refrains or similar, we might have some strength back to the US dollar. So that will be it for now. We'll go day by day on reviewing the economic calendar for the week ahead. And please remember to subscribe, and we'll look forward to keep updating you on more news and information in the always challenging currency markets. Thank you.